Everybody, welcome to the live stream today. It's a little bit different because we got NFA Live and we've got Jessica from Coin Bureau. Jess, welcome to the show.
Thank you. It is great to be here. How are you guys doing?
Pretty good. Pretty
Good.
good. And then,
Yes, thank you for hosting me. Guy is currently flying back to the UK for Christmas, so I thought I would take the opportunity to join NFA. I love watching you guys every week.
perfect. Yeah. We like, you guys got a good thing over there at Coin Bureau and Coin Bureau Clips. And then, of course, everybody, you can find both of the channels, Banded into the Cryptoverse, and then, of course, Coin Bureau and Coin Bureau Clips. Links are in the description. And today, lady and gentlemen, we have some reasonable questions to ask. And the things that we're going to talk about is, it's just because of the market and the way things are. And like I've said in the past and most recently, is that things seem to be a little bit different this time. I was in the crypto market. I got in 2017, so I only experienced the bear market of 2018, 2019, of course, then the recent ones. But it seems like right now, like we're accelerating into the Bitcoin halving as far as like price appreciation and things like that. It just seems like we're just really quick to go, especially if you take a look at like 2020. Then, of course, the Cerveza sickness that came out in March of 2020, then the halving around May, and then, of course, we accelerated. But it seems like a little bit different this time. So the question I have is, are we accelerating? Is this time different, or is it roughly the same? So Jess, since you're our guest of a guest, I'll start off with you first.
Oh, you're too kind. Thank you. Really good question. And I kind of when I saw the question, I really thought it was interesting to take a little look at the pre-halving years and dive into what we've seen beforehand. I think because it's such a new space, every single year is a different year, and there's no real cookie cutter in the build up to the halving. I think if we look at the four Bitcoin cycles that really stand out, actually 2012 and 2016, they both showed a slight rally in the build up to the halving. I would have said that 2020 was the anomaly and the exception. And that was because we had COVID, we had February, there was the Black Market Monday crash where we saw, I think, oil fell into the negative, and that did impact the sentiment of the market. So while the pre-Bitcoin halving of 2020 was still a slightly positive sentiment, it was still a weak sentiment overall. And I would say that this year is different because there's so many other characters that are at play. So obviously we've seen in general this year, adoption is just such a different ballpark. Crypto itself is a different beast. The industry is significantly bigger. I had a little look at some metrics provided by Santiment, which is a great data aggregator. I'd recommend anyone to go and check them out. And they provided some metrics on Google search terms. And I had a little look at this month, which is 6 months roughly pre-halving, and also the 6 months pre-halving in 2019. And actually, it's not so far off. So right now on Google search terms, we're kind of ranking around 21 out of 100. And back in kind of the last 6 months prior in 2019, it was around 17. So from that side of things, when it comes to spiked curiosity, it doesn't seem so different to what we've seen in previous years. And I think that's something to take note of. Obviously, we're very much in the space. We have had this previous positive price appreciation in the last few months, but overall, it's not such a significant build-up to what we've seen. I'm curious to hear Ben's thoughts.
Well, let's bring him up. Ben, you've been here longer than me. So tell me what you think and what the charts show us.
Yeah. So can you see my chart? Yeah,
I do.
So I was looking at if we measure out like ROI from like the lows from each like bear market year, like 2014, 2018, 2022. This is what it looks like from 2014. This is what it looks like from 2014.
Okay.
And in the next cycle, this is what it looked like from 2018. And then here's what it looks like this time.
It's like,
so I look at, I mean, like, I feel like there's two ways to interpret this, really. And there's been this discussion, I think, amongst, crypto people forever, right? That, what is Bitcoin more dependent on? Is it more dependent on sort of the macro stuff? Is it more just dependent on the halving? I think we're going to find a lot of that out relatively soon. Because, I mean, if you look at this chart, we're kind of where we always are at this time. We're actually ahead of where we normally are at this time. But you can see that even in this, I mean, look at this cycle right now compared to last cycle. It wasn't a smooth journey, you know, by any stretch of the imagination. So I do think people should be aware that stuff like that can happen. But I mean, this is kind of where we were last cycle as well. There's other ways to look at this. I think that, you know, and I know it's sort of a joke at this point, but I think that measuring like the dominance of Bitcoin and kind of seeing where that is, because it's useful to know if like money is flowing from alts to Bitcoin or from Bitcoin to altcoins. And there's always people who don't even know, like, is there going to be a rotation from money from Bitcoin into altcoins so that people can kid their alt season? Normally that only happens after Bitcoin hits new highs, right? Okay. But and actually we can pretty clearly see that if you just look at the hodl waves or the hodl waves. If you look at long-term holders, and so basically we're defining this as essentially anyone who has held Bitcoin for at least 6 months.
Okay.
In 2019, there wasn't really a big dip, right? In like long-term holders were not selling. Even though we had a 70% drop, they were not selling. This time, they're also not selling into this. The reason is because they normally don't start selling until we get to new highs. That's when long-term holders typically start to sell. And so, you know, when you look at what Bitcoin and the altcoin market did in 2019, Bitcoin topped out, and then altcoins topped out basically right when Bitcoin did. There was not like a continued alt season after Bitcoin topped out. And I think the reason was because Bitcoin didn't hit new highs. Like, so, you know, a lot of times people are taking money from Bitcoin and throwing it into the altcoin market. Well, if people don't take profits from their Bitcoin because it didn't go to a new all-time high, then there's just less of that to, you know, to go throw into the altcoin market. So there's that way you can look at it, right? You can look at the sort of the ROI from that bear market low. You could also look at, and this is the Bitcoin dominance without stable coins. This is the performance in 2023 compared to the average of the last 2 pre-halving years. It's doing what it always does, right? This is what it normally does. So then those two look pretty similar. And then the other way to look at it is this way. And this is, I think this is the biggest question mark for this cycle right now, is because last cycle, you can see right here, like the candles are the altcoin market.
Yeah.
And then this blue line, this is the Fed funds rate, right? So we're talking about monetary policy. So you can see that where the altcoin market broke down against Bitcoin last cycle was just before rate cuts, right here, right? Just before rate cuts, because you can see the blue line started to come down. That is where alts bottomed out, or that's where they broke down against Bitcoin and went to whatever their bottom was going to be, right? We know that rate cuts are likely coming, right? Sometime next year. And so, and also the funny thing is, look where the altcoin market is with respect to Bitcoin. It's basically at the same spot that it was last time, you know, just a couple of months before rate cuts, right? And I mean, I think the market, if I'm not mistaken, I think the market is sort of thinking that we're going to have rate cuts, you know, as early as March, as early as
May, yeah,
as early as March or May. So in that sense, we're kind of at the same spot. So it really depends on how you interpret it. You know, do you look at it more so with respect to the halving and those cycles? Do you look at more so with respect to monetary policy? Because if that's the case, and we get rate cuts, then if it breaks like it did over here, then that means that alts still haven't bottomed out against Bitcoin collectively, right? It could still mean that the dominance has further to run, is what I'm trying to say. I remember when it broke down right here, it was actually on a Bitcoin rally that broke it down. If you overlay Bitcoin onto the chart, I mean, you can see pretty clearly that right here, right, Bitcoin, where it broke down, Bitcoin was actually getting sort of this final pump just to break altcoins off of those Bitcoin support levels. So it really depends on how you interpret it, whether you subscribe to sort of the halving theory or the monetary policy theory. And again, remember in 2020, it was not a cakewalk, but we had some pretty good gains by the end of the year, but we had a 60% drop somewhere in there.
Yeah. Well, that would lead me to the next piece, which would be, well, Jess, looking at all this stuff, and we just talked about it. Do you think this is right now is sustainable, especially with, because we've seen some monster rallies, and it's not just, I mean, Bitcoin over the last 7 days wasn't up like 14-15%, which is a major thing. That's pretty great for the largest cap in the crypto market. But we've seen some like amazing rallies of, like we just talked about, Ordi, or the Ordinals coin, and Solana, and a ton of different Web3 gaming tokens like Playable and Myria. And of course, why is Rob mentioning those? Because Rob owns those, and Rob's very biased. But when we take a look at that, do you see that this is sustainable? Is it sustainable for the altcoins and Bitcoin, or is it just going to be like, well, people had their fun with alts, now it just goes right into Bitcoin? Or no, maybe it's just going to be like, no. Bitcoin dominance can just go to like 56, maybe 55, maybe 57.
Sustainable rally is always a tough phrase, because I think everyone would wish that all rallies were sustainable. But I think what we are seeing is in the next few months, this is going to be really critical for the industry and for price action. So like if we look, we've got the limited supply, stock to flow adjustments every 4 years are looking more and more positive for Bitcoin price action. BlackRock selling spot Bitcoin ETF. This is adding significant credibility to the space. We are expecting the probability likely mid-January. So that's looking to come forward. And we saw Bitwise and BlackRock updating their S1 filings for the SEC just this week. BlackRock received a 100K seeded investment for a spot Bitcoin ETF. So I would say in the next few months, this rally is sustainable. Are we going to see the spikes that we've seen over the last few weeks? Maybe not in such a euphoric manner. We've got the green background behind us because we are celebrating the markets. But I think this is going to be a positive potential trend. If we look at the likelihood of BlackRock and the other kind of spot Bitcoin ETF applications, and we see BTC allocations of maybe 1 to 3% of BTC exposure in these institutional portfolios, well, then we are going to see kind of rising prices and more attraction into a large mainstream crowd. So I do think this is sustainable for Bitcoin in the short term. Will we see some profits that will then flow into the altcoin market? I mean, typically, yes, we do see a rotation into alts. That's not so far-fetched. Not to say that alts haven't already been performing. We've certainly seen in CoinMarketCap as well more interest and curiosity when it comes to altcoin videos, and I'm sure it's the same on your guys' channel as well. People are altcoin curious right now too. So I do think that we are seeing a sustainable rally. There might be some movements into the altcoins, but I think right now a lot of focus is going to be initially on Bitcoin price action.
Yeah, gotcha. Hey, real quick, you talked about Google Trends. Was the Google trend up a little bit this time as opposed to like 2019, or was it reduced? I forgot what you said. It was up, right?
So it was up. It was 21 out of 100 for Bitcoin specifically. Yes.
Gotcha.
I will drop the link into the chat so you guys can take a look, and anyone that is watching.
Perfect. And I think that was just Bitcoin. It'd be curious to see like what sentiment has for like the different altcoins and because it's just a little bit. But remember this, everybody, and that is that, I mean, Bitcoin, we're looking at where are we at? 750, 800 billion market cap, somewhere around there. But some of these altcoins, we're talking of less than 200 million. So it's a lot easier for these things to rip on a very little amount. So even though they're like the Google Trends, which isn't an exact search per month, but it'll kind of give you like a general idea of what kind of interest there is. Even if there's a little bit, that's a lot of it for like these different altcoins. Now, not all these are going to run, and we've seen that. And I've lost plenty throughout the years, but just remember that there are some different plays that could run very well. But again, as you go down that ladder, it sure as heck gets risky. Ben, sustainability, I think you're kind of on the path that you think it's sustainable as long as Bitcoin can hit this dominance level, or it doesn't really matter for you.
I mean, I think dominance is going to go higher until we get to looser monetary policy. So I mean, what is it at now? Like 54, 55%. So.
Oh, I think
54.78.
Told you. All right.
Yeah.
So perfect.
Damn,
so okay, I know Ben. I know I know like you have this curse because you know these things and you're like, I'll just kind of guesstimate, but we know what it is.
No,
but
54.78%.
Right.
Ether Bitcoin's 052. So yeah, I mean, I think that it's going to keep going up is my guess. I mean, I don't think it's going to top out at 54 or 55. I think, I mean, it could, but I think that there's still reason to believe that it could hit 56%, 57, 58. I mean, you know, my long-term target for what the last 2 years has been 60%. I mean, how many times have I said that?
A couple times.
Yeah, a couple times, right? So I still think it's likely going to go higher at least through the end of the year. I think we could see it push higher into the end of the year, and it could go a little bit higher next year. But I will say, oftentimes in halving years, dominance doesn't go that much higher than where it ended the pre-halving year, right? So like, I don't know if I have time to pull up my.
Yeah, pull it up.
Let me go ahead and share my screen really quick. So
and it's been. There you go. Perfect.
Yeah. So like, I mean, if you look at, we've talked a lot about pre-halving years, but if you look at like halving years for Bitcoin, this is dominance excluding stablecoins.
Yeah.
You can see that in both prior halving years, dominance excluding stables did go a little bit higher than where the year opened at, but not like a lot higher, right? But it's interesting because I think the reason for that is because halving years are associated with, you know, more political election years are more so associated with more political pressure, probably felt by the Federal Reserve to go to looser monetary policies. So the incumbents not going into the elections with everyone, you know, really upset that rates are so high. So it brings about looser monetary policy, which makes it so that other assets can do, you know, can perform. The riskier assets can start to keep up with the lower risk ones, you know. So yeah, I mean, I think dominance will go up through the end of the year, and maybe even in slightly early next year, but it probably won't go up, you know, for too much longer, right? If that makes sense. As far as Bitcoin USD, I mean, you know, when you look at this chart, look at it on like just a regular scale, right? Look at the chart. Like, I don't know when there's going to be a pullback, but I mean, yeah, there's probably going to be a pullback at some point. We're now in what, 8 weeks in a row that's green.
Yeah, it's nice.
I mean, this doesn't always happen. I mean, it's hard to know like when exactly it's going to come, but yeah, I mean, I imagine there'll be a pullback at some point. One interesting thing, and again, I don't know if this time is different or not, but we've always been around the 100-week moving average sometime in like the early part of the halving year, like right here. We're at the 100-week. Right here, we came back to the 100-week, and then we were also at the 100-week right here. And all these were separated by about 4 years or so. And the 100-week starting to curl back up. So I almost wonder if you'll see it come back into that 100-week moving average, just like it did last cycle, just like it did the cycle before that, and just like it did the cycle before that. Again, could this time be different? Yeah, anything's possible, but thought it was at least interesting to point out.
Yeah, it was. And, you know, like when I asked these questions, because I always think about like, is this a little bit different? Because it seems to me like it is because of things that are running. But then when you really look at the data and like the things that Jessica pointed out, what you pointed out, it looks like maybe this is just business as usual. And then we'll see how it goes, which is great for us, because imagine this, everybody. If you think this is a great time, and like, you know, we talked about the last 8 weeks or so, imagine what it's going to be like in 2024 and 2025. If you think if this is your first cycle after 2021, you've not seen anything yet. So just get ready, because it looks to be pretty fantastic. We will see. Well, that'll lead me to the next point, the next question, which is this. We talked about looks like it could be sustainable. Looks like things are going in the right direction. We know it's not going to go up only every time. What about your portfolio right now? Is this going to be like business as usual for you? Or is it going to be, look, you know what? YOLO meme coins, here I come. So which way is it going to be? Because I got to tell you, I know we're getting kind of frothy when the people who in the chats, in email, on X, they'll ask me, Rob, what about this meme coin? Or what about this altcoin? I think I'm going to sell this to put in this. So what do you guys think as far as like for your portfolio? Because we can't give financial advice. That's the whole reason for this show. So Jess, I'll start with you again. What do we got for your portfolio?
Sure. So I am a pretty boring crypto investor. I'm not such a degen, I'm going to be honest. So my portfolio is not particularly exposed to meme coins. I would say I have no meme coins on the portfolio, a few little AI tokens here and there just to try and jazz thing up, but really 1 to 2%. and everything else is larger cap tokens. I'm still dollar cost averaging into Bitcoin at the moment. I did a little bit of a reshuffle though around 2 weeks ago and moved some Ethereum into Solana. I had a really interesting conversation and interview with Austin Federa, who is the head of strategy at Solana. And I was pretty inspired by some Solana ecosystem tokens. And I was like, you know what I need to do is maybe follow in the trend a little bit more of following the crypto narratives as they come into play. So I'm looking to reposition as we move into 2024. Had a conversation yesterday with Ethan Buckman, the co-founder of Cosmos. So as much as right now I hold some Atom in my bag, and I'll probably be trying to move some of that out from Atom into some of the Cosmos ecosystem tokens, because although Atom hasn't moved so much in the recent weeks, some of the Cosmos ecosystem tokens, I don't know if you guys have seen like Celestia, Injective, they've been moving like crazy in the last 8 weeks. So that's definitely something that I'm looking to be doing, just to kind of spread out a little bit and make sure that I don't FOMO into some of these smaller alt caps.
Perfect. And the reason why I'm smiling is because I knew as soon as you said that I sold some Ethereum that's going to go into Solana, I'm like, here it comes. And here it goes. I no longer like Jessica. Solana sucks. And of course, you have to remember that this is all the narratives. Of course, we should be supportive of everybody, but remember, it's all about what you actually have. So like for me, I put this meme every time I think about these things, is that when I talk about something that you own, you guys love me. When I talk about something you don't like, I'm a shill and the most awful person of all time. And I think that's just normal. So gentlemen,
and just to clarify, guys, I still hold it's like a 3-to-1 ratio with ETH being a more dominant player. And BTC is still my biggest bag. So it's not a lot, but I'm just in a little bit of a reshuffle. It's not full degen just yet.
See, now everybody loves you again. All right, Ben, same thing. What do you got? Is it business as usual, Bitcoin going in, or just like, you know what, I want to do a little bit of getting in there? At some point, you're going to go to altcoins, and I'll be one that asks that question.
I mean, yeah. I mean, the only crypto I've even bought in the last 2 years has been Bitcoin. I mean, you asked me, I know you've asked us this a lot over the years, and my answer hasn't changed. I mean, like the only crypto I bought since, I don't remember when, right? I mean, years has been Bitcoin. And the only reason was because I thought that Bitcoin dominance was going to go up, right? So I'm like, well, I mean, if the lowest risk cryptocurrency is going to take more market share, then why wouldn't I just keep my portfolio like heavy in that asset rather than try to predict which altcoin is going to outperform it, right? I sort of, just say to myself, I'm like, I'm not smart enough to know which alts are going to outperform it, and I'd rather just hold the one that is likely going to survive long term. So yeah, I mean, no, my crypto portfolio is basically like 99% Bitcoin, and it has been for essentially 2 years now. I would be open to changing that up, as the dominance presses closer to to 60%. But until that time, I still think that in terms of like risk adjusted returns, I think that Bitcoin is a better option. And actually, maybe there's a chart I can show. Sorry, I know I've been sharing a lot of charts today.
Ben, I'm also now extremely curious as to what that 1% in your portfolio is, if it's 99% Bitcoin.
I am also curious.
So this is modern portfolio theory, and this is like this is basically something that people use going back decades, like it's classical theory. And it's a Monte Carlo simulation of 5,000. We're showing 5,000 of 50,000 different portfolios. And we're looking at what portfolio of Bitcoin and Ethereum maximizes your risk-adjusted returns. And there's 2 ways to measure risk-adjusted returns in this case. It's your Sharpe ratio or your Sortino ratio. If you want to maximize your Sharpe ratio, which punishes positive volatility, right? Which kind of sounds weird. You might not want to punish positive volatility, right? But the portfolio that maximizes the Sharpe ratio is 75% Bitcoin, 25% ETH. If you want to go for a higher return, as you go up this curve, you'll see that the portfolio percentage, it'll go further, it'll go closer to Ethereum, right? The further you go up the curve, and less Bitcoin. But this green dot right here, this is what maximizes your risk-adjusted returns. It's like it's on the efficient friends here, right? The Sortino ratio, which does not punish positive volatility, says 80% Bitcoin and 20% ETH. So yes, I mean, Ethereum does tend to give oversized gains against Bitcoin, as long as you can time the bottom and sell the top, right? But we also know that the Ethereum Bitcoin valuation has been bleeding since the merge, I mean, it has been. It's been going down, right? So, everyone would have just been better off over the last year. I mean, if they had been over, if they had been Bitcoin heavy over Ethereum, over ETH heavy.
Gotcha.
So yeah, I mean, I still look, and by the way, to minimize volatility, it's 94% Bitcoin and 6% ETH. So that's where I am. I mean, I still think that a Bitcoin heavy portfolio is going to make the most sense right now. I mean, I also think taking profits along the way isn't the worst idea. And I mean, I know Rob talks about that all the time on Twitter. It's like
all the time.
It's like, I mean, yes, like it's gains on paper, but if you don't take profits, and it doesn't actually mean anything. In 2019, I mean, again, like I know it's like I know I'm the bad guy, right? I'm always the bad guy, but like in 2019, I saw Bitcoin rally from 3,100 to $14,000. I mean, it went up more than 3x, and then it still collapsed after that. And basically, no one took profits, right? No one. Look at the HODL waves for Bitcoin. Like, no one took profits over here. Or I mean, there's some people that did, but like most, I mean, obviously some people did if the price went down, but most people did not. And so, I mean, it only ever seems obvious in hindsight, right? So, I mean, again, like, and I'm not saying, I mean, it's not, it typically doesn't make sense to go all in or all out, right? Like, I mean, Rob again talks about DCA all the time, right? So like when you're getting into the market, it tends to make sense to DCA in. And I think everyone agrees with that. But when it comes to getting out of the market, even if it's just for like, I don't know, whether it's a short-term pullback or if it's a long-term pullback, everyone doesn't want to do a DCA out. They just want to sell everything and hope they time the top, right? Whereas that's often really hard to do. Like, no one knows where the local top is. I mean, no one knows if there's going to be a local top here at 44K or if it's going to be at 48K or 52K, right? No one knows. But in hindsight, whatever it is, everyone's going to be like, oh, I wish I had sold some. So,
Which, of course,
why did they tell us to sell, right? So I would just say that, like, it doesn't. I mean, it's gains on paper. It doesn't necessarily mean anything if you don't occasionally take profits, and it could be a small amount, right? Like, it doesn't have to be like your whole stack, right? It could just be a small amount. I think a lot of times there's there's one person, like if you're married or you have whatever. There's like one person that's like really into crypto, and then the other person's pretty much like, who cares about that? Like, why are you doing this? Like, why is all our money going into this black hole? And you never see it again. It's because the person that puts the money in crypto, they never actually take anything out.
Exactly.
Right? So their partner, all they ever view it as is this thing that money goes into but never comes out of. I do think occasionally taking profits is a good thing. And once you start doing it, it can actually become somewhat addictive.
Yeah, Jess, what do you want to say?
So I was just going to say, so we're talking about portfolio management. And I think this time of year is always really critical because it's kind of like you go home for Christmas, everyone's asking you about that crypto thing. This year is a lot more of a positive, let's discuss crypto at the dinner table than previous years, than last year, absolutely for sure. But when it comes to portfolio management, like I feel like now I'm able to be a little bit riskier with my allocations. But for newbies, I would absolutely just say to them to start with Bitcoin. There is no way I'd say start with, a mixed bag. It would just that would absolutely be my go-to because I think for them, that's the first kind of gateway into the industry. And I think that's also kind of a different question, I mean,
I think people generally should be more aggressive taking profits on altcoins than on Bitcoin because with altcoins, they really do come and go. And a lot of the ones pumping this year are different than the ones that were pumping last year in terms of a lot of the altcoins. So with Bitcoin, I think it's, people get away with being a bit more risky and just kind of like leaving it in there and letting it sit for years. With altcoins, a lot, 90% of them just become relics. And then the ones that pump in the next cycle are new coins that are launched. So
yeah. Two things. Ben, do me a favor. Can you pull up that not the DCA tool, but the DCA out tool? We're taking profits on the website. Pull that up. And then as you're doing that, I just want to comment that I think people are saying, well, and I see in the comments, all coins, there's, outsized gains and all these things, but that's true. But, you have to understand that sometimes at some point in your life, you're like, I just want to have the least amount of stress and just have the gains that are going to come to me that I know are going to not be guaranteed, but going to take, it's going to be a lot simpler to move forward. So in that vein, that's why this is what I hear a lot from people, especially like the OGs, like a Simon Dixon, the people I meet here in Puerto Rico who've been since 2011. They're just like, you know what? I just put in a Bitcoin and I just sit around and wait. And then every so often I take a little bit out. But remember, they got in a lot longer. And as time goes on, you'll be the same way. But the next thing is, well, we talk about alts, and Ben just said, and Jess just said about taking profits. Well, how the heck do we do that? Well, there's a great tool. I don't know if you've seen this. I've stolen this from Ben's website multiple times. It's DCAing in, then DCAing out. So if you're looking to say, well, when do I take this stuff? A great suggestion would be for the risk bands, which we've talked about multiple times. But then take a look at something like this. Ben, just real quick, just give us a rundown on that stuff.
Yeah, the idea is like you pick a risk level that you're comfortable DCAing out from, right? And if you're not familiar with what that is, it's this chart right here, right? So this is the risk for Bitcoin. And the idea is like every single pump, like you never know how high it's going to go, right? Like some of these pumps go up to the highest risk levels, right? Like in 2017 and in early 2021, but then other pumps only go up to like, the 0.6 to 7 risk levels, like in 2019 and in late 2021. So in every single pump, right, you never know how high it's going to go. And so rather than trying to sell everything at the appropriate time, or rather than trying to just identically time the top and shove it, rub it in everyone's faces, it tends to be better to just say, all right, well, above a certain risk level, I'm going to take profits. Below that risk level, I'm just going to DCA no matter what. Above that risk level, maybe, again, like what I do, just for the record, is like I DCA Bitcoin below 0.4 risk. And then, between like 0.4 to 0.6, I kind of don't really do anything. Like I kind of just sit around and talk about random stuff with you guys. And then when it gets above 0.6, it starts to pique my interest as, hey, like there are some pumps in history that only went out, that topped out around 0.65 risk, right? Like that was where the 2019 rally topped out, and the late 2021 rally topped out around that risk level as well. So what you can do, what people can do is they can just pick a wristband and say, well, let's say you want to do it a linear strategy. So like, let's say you take a conservative approach. That means you start selling above 0.4 risk. I think that's too conservative, right? I'm going with the aggressive approach, which means you start selling a little bit in the 0.6 to 0.7 wristband, but you don't really sell a lot, right? Like you sell a little bit. That way, if there is like a 40% drop, you can pat yourself on the back for taking some profits, right?
Yeah.
If there's not a 40% drop, then you can live with yourself for taking some profits because you still have a lot of Bitcoin to still sell. Like you only sold a small amount of what you had. And the way that works is you basically just say, all right, well, I think the projected price is going to be a certain amount. Let's just say you think the projected price will eventually be like 100,000. Then that means like, if it goes up to the 0.6 to 0.7 wristband, it means taking about 4,500 off the table, right? Whereas if it goes up to the 0.7 to 0.8, it means taking, 11,000 off the table, and then so on and so forth. So you weight your sells the further up the wristbands is the idea. And there's different levels here, right? The Sea of Tranquility one is the person that doesn't sell at all. They just sell everything at the top. But I mean, that's a really hard one because we don't, we only ever go to that highest wristband. Like we only go up to those levels like every 3 to 4 years or so, right? Like 2017. I mean, if you zoom out, right? 2011, 2013, 2017, 2021, right? So it's pretty infrequent that we go to those levels, but when we do, that's generally when you want to scale out aggressively.
Yeah. Hey, real quick, go back to that screen again and then show like the drop down for the coin where it says BTC and there's other stuff. Like click on that because you can do this for a lot of different ones. You can do this for ETH, I think you can do it for Slime, I think you can do it for a bunch of different coins that are out there, just showing everybody what's available to them. And of course, you want to check that out. There's a link in the description. And on top of that, there is one more thing, is that if you're asking yourself like, well, what kind of like alts or different stuff are out there? We've also got the Coin Bureau Club, and there's a link in the description. Well, as that guy gives you his portfolio. I like how they do the reviews. I've never heard of these things in my life. It's pretty interesting. And then also, I like this one, Dan's head of research portfolio. There's all those coins he has in there. I have no idea what the hell those are. But I'm like, if they do as much research, that looks pretty good. So again, links in the description for that. And that will lead me to my last question, which is this. Very simple. And everybody, if you could do me a favor, I see a bunch of questions coming in, but if you want to ask us some questions, go ahead and start putting those questions in the comments section now. Last question is this. Market cap, total. Right? What are we at right now? 1.64, 1.67, something around there?
1.55 according to TradingView, but it might be different on other websites.
Yeah. Maybe it's 1.55. Are we going to, for the end of this year, December 31st, 2023, are we going to be at 1.7 trillion and above or 1.7 trillion and below? Jess, again, start with you. Where are we at? And I love these price predictions because these are just guesstimates.
Well, I would say there's more of a likelihood of a chance of an upward price movement. It's anyone's guess. I don't have a crystal ball. If I did, I'd be retired on a beach by now somewhere. But kind of looking at the kind of broader scope, I think a lot of the kind of the big elephants in the room from a kind of FUD perspective, Binance, that settlement's been done. That risk has kind of been eliminated as like a potential end of year black swan that could shake up the markets. The only real thing I would say is hanging over the head of the crypto space right now is if we see any ultimate putting on the brakes from the SEC when it comes to a spot Bitcoin ETF. I think that's the only thing that if we do see that come into the play before the end of the year, any indications of a strong regulatory headwind that could potentially impact the price. I think aside from that, sentiment right now is looking pretty good. We've got the positive ETF updates, no more real FUD in the market. We've got some kind of little feel-good adoption pieces of news that are trickling through that we are seeing. So I personally would say there is a higher probability of the markets moving upward, but it is pretty close. I mean, we're on the 7th of December already, so we're pretty close to end of year. I'm not as optimistic or bullish as the likes of Adam Back, let's say, who has moved his Bitcoin price prediction from 100K pre-halving to 100K Bitcoin by the end of year. I would be extremely surprised if we saw that. But that being said, I'm not expecting there to be any kind of ultimate pullbacks in the market.
Excellent. Ben, probabilities? Or do you want to just YOLO it and say, yep, it's going to 1.7 trillion?
Look, man, I mean, it's already exceeded my expectations this year. So who am I to limit like what it can or cannot do? I would say, going off what Jess said, I mean, normally at this stage of the cycle, the reason why crypto would drop would not be anything crypto related. Like normally a lot of that gets washed out in your bear market years, right? Where like, FTX, Luna, Celsius, like BlockFi, all that stuff got washed out in 2022. I think the risk at this point has nothing really to do crypto related. I mean, even if a spot ETF is denied, which I mean is a chance, right? I mean, I don't really know what the probability is. I imagine pretty small, but even if it's denied, it shouldn't, like that in and of itself, I would not think would completely derail everything, right? I mean, Bitcoin has done very well for a long time without a spot ETF. So it's not like it has to have one to do well. I think the bigger risk, and if you can show my screen, I think the bigger risk, and I've said this before, is the macro risk, right? Like, do we start to feel all the effects of the rate hikes in 2024 or 2025? This chart here, this is the blue line is the S&P 500, and then this yellow line, this is job openings divided by unemployed workers. So like, so basically, like right now, it's the ratio is at 1.34. So for every unemployed worker, there's 1.34 job openings, right? So that's pretty good right now, right? Like, I mean, there's still a lot of job openings for every unemployed worker. I think like if the Fed, there's always the chance the Fed can engineer a soft landing, but if they're going to do that, they need to start cutting soon, so that this metric doesn't keep collapsing, right? Because, if it goes below 1 or if it goes to like 0.7 or 0.5, then you really are in recession territory, right? I mean, look over here, the last 2 times this metric was dropping, like the S&P was not doing good things. So again, I think at this point, there is still a lot of excess in the labor market, there has been a lot of excess for a long time. It all depends on whether the Fed can slow these things down before it gets out of hand. And I think that'll be dependent on if they can actually cut rates quickly enough to sort of engineer that soft landing. So I would say, what Jessica said is probably pretty true in the sense that, the main, I don't think like the crypto specific risks are the main things that crypto investors need to be worried about. I think it's just, whether the macro holds up next year or if it doesn't.
Yeah. Excellent responses. I got to tell you, we temper a little bit of expectations. We feel bullish right now, but remember, I mean, what goes up essentially will at one point do a pullback. So just be aware. I don't know if there's going to be a crash coming, but that's what we have. All right, everybody. So we'll jump into the questions right now and go from that. Also, as a quick reminder, my back's feeling better. So because of that, what we'll be doing is we'll do a quick meetup tonight over at the San Juan Smokehouse. My friend Steven owns that place, and it's a pretty good place just to come by and just talk crypto. And the first beer is on me. Second beer is on Steven. So there is a link in the description. Also, here's the address and where it's at over by Condado. So hope to see you there. Lastly, the questions. So let's get into it, shall we? I like this one. Nola says this. I always like to put up the worst ones first. Everyone in this space is guessing. Advice, do your own research. Stop giving these so-called crypto influencers. I put this up as a reminder that yes, everything that we talk about, these are the best educated guesses that we can possibly give you. But of course, nobody knows what's going to happen. And for me, we give the best information. Jessica and Ben come out with some fire alpha. So all you can do is just take that information, do as much research as you possibly can, and make the best investment for you and your family. We can't give you enough financial advice. That's the reason why we named the show that. Rob, please do a segment around January 1st about IRA contribution strategies. For IRAs, well, I use iTrust, but you have until in the States, April 15th to actually contribute to your IRA. So you got a little bit of a time, but just remember, you can also do trades within your IRA, and those are tax-free in the United States. I don't know how it works in Dubai or UK or any place like that. I'm only American. Someone says, Ben, we love you. You are hot. And Ben has 4 kids. Their names are B, T, C, and D. That's pretty funny. And here's a good question for Jessica from Ben's Haircut. How did Jessica manage to score the first and only interview with the new CEO of Binance? That is a good question, actually, because when I saw that came out, I was like, that's pretty fast.
You misread the question. It doesn't say Binance. It says...
Oh, that's right. Excuse me. That's how you should say it. Yeah, from Janet Yellen.
Janet Yellen was right all along. Who would have thought it? So we were kindly speaking with the C-level team at Binance for a few weeks in the build-up, actually trying to get an interview with CZ himself. But as the news broke, we were kind of quickly pivoted to the interview with Richard Teng. So it was a lot of coordination. The team actually turned up to the Coin Bureau HQ to start filming around 6 a.m. Wow. So it was a lot of hard work with our team, but we were really glad to do it. And hopefully it answers some questions for Binance holders, particularly in the US as well, because I think when stories like this come out, we saw mainstream media kind of fudding on it a little bit. We just wanted to get to the point and answer as many questions and give some clarity. So a big thanks to the Coin Bureau videography team and Binance as well for helping hook it up.
Ah, excellent. You guys got the good connections. Excellent. Someone says quite a lineup. And then how about this one? Your thoughts on a Bitcoin super cycle when an ETF was approved that could mirror when gold ETF was approved? What does everybody think about this? Because I took a look at a chart, and when the ETF was approved for gold, it did great, but to hit like some pretty big numbers, it took a couple of years to really go parabolic, I guess. Any thoughts on this one?
I don't really have any strong thoughts. I mean, I think we should all just generally stay away from the word super cycle. But I mean, commodities were also in all commodities were in a bull market when that ETF was launched too. But yeah, I mean, I have no idea. I wouldn't subscribe to the sort of super cycle idea, but
yeah,
yeah.
I don't either, unless it becomes part of a sovereign wealth fund, or becomes like a reserve currency of multiple countries moving forward. Jessica, anything on this one?
Yeah, I would agree. I actually have a Coin Codex article on Bitcoin halving dates and prices. And I think even if we do see a spot Bitcoin ETF go ahead, the price cycles that we're going to see, I would expect them to get more and more subdued over time. I'll drop the link in the comments for everyone to take a little look. But I would say as the crypto industry grows, super cycles are going to be more and more of a thing of the past.
Yeah, perhaps so. Which will lead me to the last question here. Is the spot ETF a sell the news, buy the rumor, like the ETH merge? Which was a good point, actually. ETH merge came out and we saw, went up pretty well, but then, but of course, that was a different time frame. What are we going to do here?
Well, Ethereum, the Ether USD hit it's higher than it was then now, but at the time, it actually topped out a month before the merge. It was the Ether Bitcoin pair that topped out like on the day of the merge. So
on the day.
Yeah, I think it was like the day, because there was like a spike like right at the launch, and then it collapsed ever since, right? Yeah, I wouldn't be. It almost seems like a lot of people are front running it right now. So you might even get a local top in December before it even launches. And again, like that doesn't mean that it can't recover later on, like in the cycle, like 2024, 2025. But Ether USD topped out before the merge and then had a pretty large correction. So maybe, look, Bitcoin is up 8 weeks in a row, right? Like at some point we're going to get a red week, and we'll, we'll see what that's like again. I think we don't remember what it's like for the market to actually have a red week. So I think there's a good chance we'll see some type of local top in December, and then we'll see what happens next month.
Yeah, Jessica, buy the rumor, sell the news, or just gonna keep them going up?
It wouldn't be so far-fetched for us to see some profit taking on the back of the news. But I think in the longer term, if we zoom out, this is a long game in crypto. So longer term, I can't see it having a sell the news impact, which is not going to break past what we're seeing in the buildup,
Yeah, I can see that. All right, everybody. So that's it for today. Again, for the meetup tonight, I forgot to tell you the time, 5:30 to 7 p.m. Here on Atlantic Standard Time for Puerto Rico. But that's it for this session. So again, thanks to Ben and Jessica. I appreciate you guys stopping by. And of course, you can find the links in the description for their channels and Twitter and all that great stuff. That's it for today. So thanks, everybody. Like and subscribe, and we'll see you on the next one. Adios.
See you.